The union budget for FY26 has been tabled. You probably watched it on news or read somewhere online. But budget tends to have a spate of announcements, so it's likely that you have missed what really matters for you. Don't worry. In this video, we will talk about 4 key takeaways from the budget for savers and investors. Hello and welcome to ET Money's YouTube channel. Now, even if you missed watching the budget, this video will tell you all you need to know. So do watch it until the end. So let's begin with the first takeaway. Yes, tax slabs in the new regime has been revised yet again. They were revised in July 2024 and they have been sweetened further. Now, those earning up to 12 lakh in a financial year won't have to pay any tax. Now, if you include the standard deduction of 75,002, this takes the actual tax-free income to 12.75 lakh. The revised tax slabs are on your screen along with the older ones. Now, as you can see, tax slabs have been shifted upwards. For instance, earlier there was nil tax on income up to 3 lakhs. Now, this amount has become 4 lakhs. But wait a second, didn't we just say that income up to 12 lakh rupees will attract no tax? Actually, those earning a total income of 12 lakh rupees will receive a tax rebate of 60,000, which will make their tax zero. But if your total income is above 12 lakh, the tax rebate won't be available to you. But sure, you can benefit from the revised tax slabs. Now the table on your screen shows how the new slabs will reduce your tax outgo. For instance, consider a person earning 10 lakh. Such a person had to pay a tax of 50,000 earlier. After the revised slabs, the tax will be 40,000. Now because this income is less than 12 lakh, a rebate of 40,000 will be applicable, which will bring the tax down to zero. Next, consider someone earning 20 lakh rupees. Now earlier such person had to pay 2.9 lakh in taxes. After the revised slabs, this tax will be 2 lakh. But because the total income is above 12 lakh, there won't be any rebate applicable. So the tax payable will be 2 lakh only. So two things have happened here. First, those in the comparatively lower income groups have been entirely exempted from tax. Second, the tax payable has come down even for those in the higher income groups, but they can't avail of the tax rebate. Also, marginal relief continues to be applicable on incomes marginally higher than 12 lakh. Let me explain this benefit with an example. Let's consider someone earning a total income of 12.25 lakh. Now, since this income is above 12 lakh, the rebate is not applicable. The tax applicable as per slabs will be 63,750. Now, such a person can take advantage of marginal relief and pay just the amount exceeding 12 lakh in tax, which is 25,000. Now this feature is called marginal relief and this is not a new addition. It was available earlier as well. Now do note that tax slabs only in the new regime have been revised. The tax slabs in the old regime have been left unchanged. Now with this revision in tax slabs, you will now have to reassess which tax regime is more beneficial to you, new or old. Okay, let's move to the second major change. The Finance Minister has rationalized rates for tax deducted at source or TDS and tax collected at source or TCS. A convenient example of TDS is the tax cut by your employer before paying your salary. And when you remit money abroad, the tax held by the bank is tax collected at source or TCS. Now the most notable changes in the TDS and TCS rates are in the table on your screen. First, the limit for tax deduction on interest for senior citizen has been doubled from 50,000 to 1 lakh. Second, the annual limit of 2.4 lakh for TDS on rent has been increased to 6 lakh. Third, the threshold to collect TCS on remittances under the RBI's liberalized remittance scheme has been increased from 7 lakh to 10 lakh. Fourth, TCS on remittances for education purposes has been removed, but such a remittance must be out of loan taken from specified financial institutions. Fifth, the threshold for TDS deduction on dividends from stocks and income from mutual funds has been increased from 5,000 to 10,000. The Finance Minister also said that the provision of the higher TDS deduction will now apply only in non-PAN cases. Let's take a look at some other provisions that are useful for savers and investors. But before that, do hit the subscribe button if you aren't already a subscriber. First, A new income tax bill will be introduced in the parliament over the next week. It will be simple to understand for taxpayers and tax administration, thus leading to tax certainty and reduced litigation. Second, you can now file updated IT returns for any assessment year up to 4 years from the end of the assessment year in place of the current limit of 2 years. The finance minister said that the updated return facility, which the government brought in 2022 for voluntary compliance, has proved to be a success. Nearly 90 lakh taxpayers voluntarily updated their returns by paying additional tax. Third, you can claim the annual value of two self-occupied properties to be nil without any conditions. Earlier, also it was possible, but there were certain conditions attached to doing so. Now, there will be no conditions. Fourth, if you are a senior citizen who has a very old National Savings Scheme or NSS account which is no longer earning any interest, you don't have to pay any tax on withdrawals made on or after 29th August 2024. Fifth, the NPS Vatsalya account will now enjoy the same benefits under Section 80 CCD 1B just like the normal NPS account. Under Section 80 CCD 1B, a taxpayer can claim an additional deduction of 50,000 over and above the 1.5 lakh deduction under Section 80 CCE. But do note that this tax benefit is available only in the old tax regime and not in the new one. Sixth, gains from unit-linked insurance policies or ULIPs whose annual premium is above 2.5 lakh will be treated as capital gains. Earlier, there was some confusion if these should be treated as capital gains or income from other sources. Seventh, a revamped central KYC registry will be rolled out in 2025 to simplify the KYC process. Eighth, Swami Fund 2 with capital of 15,000 crore will be established for fast completion of 1 lakh stressed housing units. Swami is an acronym for Special Window for Affordable and Mid-Income Housing. Under this scheme, the government has completed 50,000 units in stressed housing projects. Another 40,000 will be completed in 2025. Let's now take a look at a few good to know things in the union budget before we wrap this video up. The finance minister said that the proposed development measures in the budget span 10 broad areas focusing on Garib, Youth, Annadata and Nari. For this journey of development, the FM said that the four powerful engines are agriculture, MSME, investments and exports. Now, the budget aims to initiate transformative reforms across 6 domains: taxation, power sector, urban development, mining, financial sector and regulatory reforms. Next, let's take a look at some economic data. The key budgeted and revised receipts and expenditure numbers for FY25 are on your screen. The revised estimates are broadly in line with the budgeted ones. The fiscal deficit estimate is better than the budgeted one. Now, as far as the budget estimate for FY26 are concerned, the targeted fiscal deficit is 4.4% of GDP. The other numbers are on your screen. Let's also take a quick look at some other budget provisions around industries and sectors. To spur agriculture growth, the initiative plans include the launch of Prime Minister Dhan Dhanya Krishi Yojana, which will cover 100 districts and help 1.7 crore farmers. Enhanced credit of 5 lakh through Kisan credit cards, a national mission on high-yielding seeds, a 6-year mission for Atmanirbharta in pulses, using the India Post as a catalyst for rural economy, etc. Now, for MSMEs, the key provisions include credit cards with 5 lakh limit for micro enterprises, loans of up to 2 crore for first-time entrepreneurs, special measures for labor-intensive sectors including footwear and leather, toys and food processing. For industry, the steps taken include, with an outlay of 1.5 lakh crore, 50-year interest-free loans to states for capital expenditure, a maritime development fund with a corpus of 25,000 crore, nuclear energy mission for Viksit Bharat, regional connectivity to 120 new destinations through the Udan scheme, development of top 50 tourist sites in partnership with states. Now, to promote exports, the provisions include an export promotion mission, a digital public infrastructure called Bharat TradeNet, warehousing facilities for air cargo and so on. In the insurance sector, the FDI limit has been raised from 74% to 100%. For skill and human resource development, the measures include 10,000 PM research fellowships, 20,000 crore allocation to private sector driven R&D, setting up of 5 national centers of excellence, 50,000 Atal tinkering labs, 500 crore for center in excellence in artificial intelligence, etc. For ease of governments, Jan Vishwas Bill 2.0 will be introduced to decriminalize more than 100 provisions in various laws. Apart from these, there were several changes in duties and tariffs which are usual in union budgets. And with this, I have come to the end of this video. I hope you found it useful, but this is not all. We'll be going deeper into the budget and try to bring you more insight soon as far as the major beneficiary sectors and stocks are concerned. So stay tuned. Now, as always, do like, share and comment in large numbers. I'll see you soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.